If I am a creator, presumably I've just set up and I'm now being approached by brands wanting to pay me money for doing brand deals with them. What is the difference between receiving income in my own name and when should I start to consider setting up a company, for example?
Sponsorships have become obviously quite big on TikTok, but not as big as other platforms. If you're a limited company, you can restrict what you pay yourself in salary and dividends. If it's personal wealth, stay as a sole trader, you'll take a bigger tax hit, and then you can invest the rest of your money.
Are there any benefits in terms of VAT I can claw back on certain expenses that I incur?
There's a voluntary entry into this. Do I want to be VAT registered?
Right, so in this video, we're going to be talking about, do we need to pay tax on our TikTok income? TikTok Shop, it's all the rage at the moment. There's rumors, well, it probably is going to happen, that TikTok Shop is going to overtake Amazon at some point to be the #1 marketplace in the world. So this is for you if you are earning income from TikTok, be it through affiliate income, be it through TikTok Shop, be it through sponsorships and brand deals that you are doing. I've got my colleague Brendan here from Capture Accounting, who's going to be shedding some light on everything to do with TikTok income. Hey Brendan, how you doing?
Great to be back.
Good. So let's kick off with TikTok income. It's clearly we're getting a lot of interest now and people getting in touch with us who are building businesses, getting income from doing the stuff that they are, content creation that they are doing on TikTok, which is fantastic. The ability to be able to kind of build a business from nowhere, given the platform that has erupted in recent times. So to kick off with, let's start off with what are the different types of income you could be receiving as a creator, and how do we deal with that?
So in most cases, we know TikTok is mainly short videos, okay? And in most cases, nowadays anyway, when you go through TikTok, you'll see sponsorships everywhere, okay? Sponsorships have become obviously quite big on TikTok, but not as big as other platforms because they don't want to saturate it, but that is coming more and more. At the minute, the main types of income we've got is this split. We've got affiliate income where people click links, they make a payment for a product, and then they get commission based on that, okay? And then they have actually being putting your product on the marketplace to sell through the TikTok shop. So we've kind of got a manufacturer and we've got a commission-based model at the moment.
Okay. Fantastic. So if I am a creator, presumably I've just set up, I don't know anything about companies, I have just started to put content out and it's got traction, my videos have gone crazy, and I'm now being approached by brands wanting to pay me money for doing brand deals with them. What does that mean? I'm a sole trader. So what is the difference between just receiving income in my own name and when should I start to consider setting up a company, for example?
So it's not as straightforward as it used to be honest, because the benefits have shrunk quite massively. And what I always say to clients is, what's your exit strategy? Okay, in most cases, when you're a content creator, you don't want to do that forever, or there's a lifespan for this. So you want to build away from content creation. And in most cases, that means actually having a company to be able to incur corporation tax and then be able to invest the rest of your money to sustain wealth, whether it's property, shares, crypto, whatever you choose. In most cases, a company is the best option for that. And the reason why it's the best option for that is sole trader, you are taxed on your profit. And your profit will always go into higher rate tax bands, for example. If you're a limited company, you can restrict what you pay yourself in salary and dividends. And a lot of people that I work with specifically, the exit strategy is always to move away from content creation. It's not personal wealth. If it's personal wealth, stay as a sole trader, you'll take a bigger tax hit, and then you can invest the rest of your money. If you're looking at saying, well, no, I want to invest more and I want to be able to sustain that wealth, then the limited company is always going to be the better option. Take the 25% tax hit, unfortunately, and then you can reinvest the rest. If you take it personally through sole trade, you could start at 20% with national insurance included on top of that. So you're going to lose a lot more of that income that you've made. So you're not going to be able to invest at higher rates.
Absolutely. So it's much more likely that if you are receiving income in your own name, you're going to, once you cross that £50,000 barrier, which is the basic rate threshold, you're going to start to pay 40% tax on your income, whether or not you're using that money or not. Whereas in a company, because it's a separate legal entity from yourself, the company pays tax on its profit. Currently, the highest rate is 25%. You only take out what you need. So you can take out up to the 50K and pay yourself a salary dividend. So stay within that basic rate threshold and therefore not going into that 40% threshold if you don't need the money. That's a very good point there. In terms of just backtracking a step slightly, once I'm receiving this income, when do I need to notify the tax authorities that I'm now receiving income from a business and start to declare tax on it?
Okay, so if you're a sole trader, you have to notify HMRC within 30 days. So you need to tell them that you've started trading. But that's not any filing requirements. Filing requirements is always from April to April. Okay, so 6th of April to the 5th of April the next year. And then you have until the 31st of January to file electronically for your self-assessment. So if you were starting trading, I don't know, let's say July 23, your first period end that you would need to look at would probably be the 5th of April 24, and then you would need to file by the 31st of January 25.
Exactly. Fantastic. Right. So tax year runs April to April, and that's what you need to make sure that you get your accounts and your taxes, your self-assessment return sorted and filed before the filing deadline, which is normally 31 Jan following the end of the tax year. Okay, so moving on from that, let's assume now that we're doing really well, income is coming in, we've got brand deals left, right, centre, we're getting affiliate income, and now our income is increasing. When do I need to start consider registering for VAT, for example?
Okay, so VAT in these cases is quite complex. Okay, when you get into content creation, it's international. The businesses you're operating with are never really just going to be domestic. In most cases, you're looking at the US being a big player in this market. So in the case of TikTok itself, it can be split depending on the trade. Okay, so TikTok shop can depend where your stock is based, for example, in most cases, and then it's to the end product. So if you're selling to someone in the UK, you'll pay UK VAT. Okay, if you're looking at the more commission-based route of the affiliate income, then it's you operating with TikTok. TikTok's the one that owns the trade. They're the merchant of record. So that means that you are essentially operating with them and where they're based. TikTok is a UK company. They have a UK company and a presence in the UK. So it depends who is on the top of your remittance advice slip to say who is paying you. If it's TikTok in the UK, then you will pay VAT depending on how much that you're earning. Okay, if you're below the 90k threshold, great, you don't need to register, it's not mandatory. But if you go over that, you will need to register and pay VAT.
Okay, so it's the 90k, so in the UK, the VAT threshold is 90k of turnover, and that is over the last 12 months. So if you look back 12 months and your turnover has gone over 90k, then you have to register for VAT, and VAT will automatically be shown on the TikTok remittances that you receive. Is that correct?
Yeah, it's because you operate with TikTok. TikTok is the one that actually owns the trade. They're the ones that's operating with whoever's paying for the ad spend. So from your side, you just need to make sure, okay, A and B is me and TikTok. Where is TikTok based? They have premises all around the world, but they do have a UK one. So if you're under the UK branch, it's going to be VATable. It's a B2B supply. It will be 20% VAT.
Exactly. And if I'm doing brand deals and the brand companies, then it's my obligation, right? In order, once I receive at least 90k of income, I go beyond the VAT threshold. I now need to start adding VAT onto my invoices to the sponsors for the brand deals that I'm getting from them.
Yeah, you will need to do that. If you're operating with sponsors, it's always going to be a business to business. It's always going to be your business to a business paying you. So when you're looking at those kind of deals, you have to look at where they're located. Okay, if they're located in the UK, you're going to pay UK VAT. If they're outside the UK, then in most cases you can do something called a reverse charge locally if they've got a country there registered for VAT or general sales tax or anything along those lines. But in most cases, you're not going to pay VAT outside the UK. Just focus on domestic. You're paying VAT on a B2B supply.
Yeah. And this is often an area which gets overlooked because a lot of clients come to us, they're creators, they work with an agency who helps them get the brand deals, and they are just the ones who process the payments, and the creator just gets the money in their account, and they're none the wiser. No one's ever told them you need to actually raise invoices and charge VAT if you've gone over the threshold. Yeah. So what would you say to a creator in terms of what they should be saying to the agency in terms of if they've gone over the threshold, to start notifying them that, I need to start raising invoices and making sure that we collect now VAT on top of the amount that's been agreed for the particular brand deal?
I think the key takeaway from this is you need to know where your customer's based. You need to know who is the point A and point B in the taxable line. So you need to make sure that you know where your customer is based, and then you can work out if it's a business to business, it's going to be VAT depending on where they're located, okay, which is the common rules. So what you need to do as a client, you need to know where your customer's based, know where the different income streams are, and then you need to be able to tell, or you should have an accountant that should be able to help you with that, because in most cases now we've got software that can tell us, like Stripe Tax, or there's all these platforms now that can tell us where people are located, and then we can use that to be able to advise you on what countries is applicable for VAT.
Yeah, absolutely. Good. And in terms of what are the benefits? So if I have to become VAT registered, I need to start charging VAT to sponsors, for example. What are the obligations now once I'm VAT registered? What do I have to do returns wise? And what are some of the benefits in terms of now being registered for VAT? Are there any benefits in terms of VAT I can claw back on certain expenses that I incur?
There certainly is. It comes with extra costs in most cases, because you do need to file a quarterly VAT return. You can change it to annual. There is an annual VAT return option, but mainly, common one, quarterly VAT returns. And to produce a quarterly VAT return, it means you're going to be paying an accountant a bit more money. Perks of it is that your accountant is probably also charging you VAT. So then you can reclaim VAT on any purchases that you include. I get it at the moment. In the industry you're in, especially if you're in TikTok or you're in content creation, most companies are in the US. They're not going to have VAT included. So check your costs that you've got. Check what's actually included in VAT to work out what your benefit is. So for example, if you buy equipment locally in the UK, we're sat here now with mics and that side of things, then most cases that's going to have 20% VAT. You can get that back. You can reclaim that 20% that you have to pay. But most software isn't.
Yeah, absolutely. I mean, there are a lot of things. There's, like you say, there's equipment, there's your cameras, there's your laptop, there's your phone, there's your mics.
It's a lot more than you think.
Absolutely. There's your travel and things like that. So if you're going overseas and you're having to book hotels and things like that, or probably not overseas hotels, but if you're going around the UK and you've got to stay overnight in a particular location to be able to do a shoot, then you can claim your travel costs, and you can claim VAT on your hotels and accommodation and travel and that sort of stuff, right?
Yeah, there is benefits to it. There is the benefits is you can reclaim, and it is a large benefit in some cases. Some cases might not be a very big benefit, but you'll notice when you're charging VAT out to these customers that's local with sponsorships and that side of things, they don't mind paying VAT because they're going to reclaim that back on their tax returns. So it's a key thing to note with this is have a look at your sponsors. If you've got common sponsors, speak to them, say, if I become VAT registered, it's going to be a problem. Most cases, they won't mind.
Yeah, absolutely. Is there anything else in terms of if I'm a TikTok creator, anything else I need to be wary of, watch out for when it comes to my taxes, making sure I'm fully compliant so I don't get hit with any penalties anywhere?
Well, I think the other thing that I would note on this is, and we haven't touched on with VAT, is there's a voluntary entry into this. Do I want to be VAT registered? And in that case, you can reclaim your VAT. So if you've got a taxable supply in the UK and you have sponsorship, say it's only 20,000 a year, then you can still register for VAT in the UK. You can still reclaim your costs. Okay, that sponsorship might not mind you being VAT registered, and then you can get all your VAT back. So there is a voluntary limit here as well that you need to take into consideration to say, well, actually, if I was to register because I want to, not because I have to, there is still a benefit that can be had there. So speak to your accountant, see what the benefit is.
Absolutely. Fantastic. Thank you so much, Brendan. It's been really useful. Hope you've got value from today's video. And if you want to have a chat with us in terms of what your requirements are, what your obligations are, whether you're doing things in the right way, then there should be a link in the description of this video for you to come in and book a call with us. Otherwise, take care, and I'll see you in the next video.